Hi everyone, welcome back to the Web3 channel. My name is Zach. In this video, we're looking at some interesting regulation news. Always very exciting to see. This time, we're looking specifically at spot Bitcoin ETFs, and we're looking at President Biden looking at an executive order for cryptocurrency. Let's go through what's happening here, just so you can see the full title. Support for spot Bitcoin ETF revs up as agency holds course. SEC Chair Gary Gensler said he's technology neutral in a letter to US Rep Tom Emmer. Now, we have seen Tom Emmer's take on this, which is basically, he's an advocate, but he's also hopefully healthily skeptical about things. Gary Gensler, on the other hand, has definitely been an interesting person in this whole story. With that being said, let's have a look at what's going on here before we look at the Biden administration executive order. SEC Chair Gary Gensler said his agency must consider whether a spot Bitcoin ETF is designed to prevent fraudulent and manipulative acts and practices. Nearly 100 people have so far weighed in on Grayscale's investment's proposed conversion of its Bitcoin trust to an ETF in public comments to the SEC. As the SEC refuses to budge on signing off on a spot Bitcoin ETF, a growing number of industry participants are urging the regulator to reconsider. The latest battleground, Grayscale Investment's proposal to convert its Bitcoin trust to an ETF. The firm filed to morph the 28 billion USD Grayscale Bitcoin trust to an ETF in October after the first Bitcoin futures ETF began trading. During the SEC's 240-day review period, which expires in July, the agency is soliciting feedback from the public. Andrew Farinelli, a private wealth advisor at Embry Financial, wrote to the SEC that the conversion would reduce costs and improve security for Bitcoin investors. Chicago-based Embry, which has 85 institutional clients and 300 families, runs about 1.5 billion USD. Their accounts and investment would then have to be fully protected under the FDIC. It would be custodied at a trusted institution such as Charles Schwab, and investment itself would be safe under the SEC's regulation of ETFs. Lastly, this allows investment professionals like myself to provide the best guidance to their clients at investors at large. The SEC chair, meanwhile, has given Bitcoin ETFs hopefuls little reason for optimism. In his latest public comment, Gensler wrote a letter to Tuesday to US Rep Tom Emmer, saying the different holdings of Bitcoin spot and future products have led to different regulatory outcomes. Gensler is technology neutral on the outcome, he wrote. When reviewing Bitcoin spot ETPs, the Commission must apply all the standards of the Exchange Act, which has followed in connection with its orders considering previous proposals to list Bitcoin spot ETPs. In particular, the Commissioner must consider if the Bitcoin spot ETP proposal is designed to prevent fraudulent and manipulative acts and practices. The letter followed a November dispatch to Gensler from Emmer and Rep Darren Soto, saying the agency's approval of a futures ETF should equate to a green light for a spot product. We do not understand the SEC's views around the perceived material difference in risk profile, since both the futures and spot Bitcoin markets are inherently intertwined and bear the same risks regarding fraud and manipulation. The stakes are rising. A survey last month found that the percentage of financial professionals investing client funds into crypto rose from 9 to 15% over the past year. 60% cited regulatory concerns as preventing them from making their first or increasing their crypto allocation, while 32% noted that the lack of easily accessible investment vehicles such as ETFs. The argument of industry powerhouses such as Coinbase is that a spot ETF would lead to an expansion of safe retail investment in Bitcoin. Paul Grewal, CLO at Coinbase, also wrote a letter in support of the conversion in December. We believe investors should have access to GBTC in an ETP format because it offers a tried and tested way for retail investors to gain exposure to Bitcoin at prices that closely reflect spot Bitcoin trading prices without holding it themselves. Grau joined more than 100 people in writing with the majority in support of the Grayscale conversion. This issue remains a priority for us, and we will continue to oversee the SEC in its mission to maintain fair and orderly markets and facilitate capital formation. A spokesperson for Emmer did not immediately return a request to comment. Let's go in to what's happening when it comes to the Biden administration expected to issue an executive order. As we can see right here, President Biden is expected to issue an EO on regulating crypto next week. Let's see what's going on here.
Well, let's get a little bit more color on everything that's going on in the crypto world with Michelle Bond over at the Association for Digital Assets Markets. Great to have you on the program, Michelle. You know, you're the CEO of an agency or an organization that really has front row seats to all of this going on. I'm just wondering if you could kind of quickly respond to that news. Obviously, a lot of interest from the White House in getting a closer look to crypto. I mean, when you see names like the State Department perhaps getting involved, do you feel like this is a productive way to be approaching a possible framework for regulation?
Yeah, so I do. And there has been talk of this executive order since last November. It was actually supposed to be issued back then. And it was, I think at that time, rumored to actually have even a broader sort of mandate where there was supposed to be a crypto czar appointed, and they were actually going to propose some more regulatory measures as opposed to just having a study. Over the past few months, the Biden administration has seemingly sort of walked back from where they're,
So let's just have a quick look at what's going on here. So directs Treasury, State Department, Attorney General to study the CBDC. FSOC will study financial stability of crypto. Attorney General, CFPB to look at digital asset impact on market competition. Basically, everything we're looking at right here is what we've been looking at least on this channel now for a little while.
Initial position was. And what they are doing is this whole of government approach, and essentially now, requesting several studies. These studies will be conducted, as you noted, by several different members, all across the government. So yes, it will include the intelligence agencies, the State Department, the markets regulators, the bank regulators will all be involved, and they'll make recommendations. I think it's also important just to note that a lot of these things, even when there's a study and recommendations made, a lot of these things do require an act of Congress. And Chairman Powell of the Fed has given his commitment to Congress that before a CBDC moves forward in the United States, that he will make sure that he gets the congressional buy-in before that's done. There is a Fed open proposal right now that the industry is working on providing public comment on. So there's, I think, a lot of moving parts going, but I think this is a positive step. And I think, having the federal government study where the risks are, where the benefits are, what the opportunities are, and, in a whole of government way, I think that's a good thing for crypto.
Michelle, when we talk about how the regulators in DC work, it's important to note that everything moves very slowly. And even this EO is just beginning studies at the various agencies to kind of embark on a possible.
It's important to note as well that this doesn't necessarily just come down to us being able to invest in cryptocurrencies. This also comes to a case of when we see Web3 companies using Web3 technologies, which oftentimes is using NFT technology, for example. Many NFT projects, companies that aren't Web3 primarily, but are trying to dabble in it, even looking at YouTube, for example, TikTok, etc., they want to know what is the rules, what are the regulations going to be before they start investing absurd amount of money to know roughly what is going to be compliant.
Regulatory framework. But do you feel like the trade group and your members have a seat at the table? Because as all of this is happening, kind of the voices that these regulators solicit as they try to figure out what the best approach here is pretty important, is it not?
Yeah. So what I absolutely love about Adam is we created our own seat at the table. So in 2018, when our group was formed, we actually proposed our own code of conduct, and that's what has been regulating the crypto spot market. So all of our members agree to adhere to our code of conduct, and it creates all of the guiding principles for custody, settlement, trading in markets, conflicts of interest, you name it. I think it's really important to note that, because what the industry has done here is actually has raised the bar for market integrity higher than what any federal regulator has done to date. So I think obviously, from that respect, yes, the industry has had a voice in the regulation of the industry. And then secondly, I would just say, look, we have been very, very busy with the comment letter process. And we will continue to engage productively via the comment letter process with, the Fed, the SEC, all of the open proposals. And then in addition, we've been very actively engaged with Capitol Hill and working on different legislative solutions for this space to make sure that innovation is not hampered in any way in the United States, but also in a way where consumers can be protected.
Michelle, there are a lot of voices out there, and one of the big voices that got a lot of attention specifically yesterday was Berkshire Hathaway's Charlie Munger, who made some remarks about cryptocurrency at large. I want to play a clip of what he said yesterday. Take a listen.
You let a bad genie out of a bottle, God knows what happens. I think it was a huge mistake to allow it at all. And the truth of the matter is our regulatory establishment, when they quit the government, they go out into this heavily promotional capitalism. And so it's very hard to get the government to make good, wise decisions about something like Bitcoin.
And then Munger, after the fact, mentioned that he feels like China handled cryptocurrency better by just outright banning it. Just wondering if you had any response to that type of commentary that's obviously out there in the ether.
Yeah, absolutely. Look, I think digital assets are here. They're here to stay, and they are the natural evolution of finance. And when you look at digital assets and cryptocurrencies, look, it's more than just an investment opportunity. We see payment rails that are being simplified. These secure blockchains have uses from gaming to medical records. It's
exactly what I just said, right? It's brilliant that she's bringing this up, is that this isn't about how many people can get rich off Bitcoin, Ethereum, Cardano, Solana, every other coin you can think of. That is a very, very simplified and too simplistic way of looking at Web3 and blockchain overall.